Crude oil started the week on a flat note and so far it has stayed above $90 levels. Remember 89.8 level is where little bearishness and then below 89.4 for the bearishness to prevail. Now what to expect from crude oil today, whether we can expect it to rise again from today onwards or is it again going to retrace further on the downside towards 88 and below levels. Which position you should take in order to profit trading crude oil today, we will see with the help of charts and indicators. Do listen to it carefully, do watch till the end. Let's start. First we look into our on the hourly charts. One must note, see the drop, the retracement, the drop, the retracement, and the drop here, then again trying to consolidate. Look at the moves here, the sharper drop here, while the retracement is with smaller candles here. This suggests that the movement is not yet there and we have to wait a little for it to confirm the rise. Now, we all know, those who follow me for long, 90.6, 91.2 is the zone where we have maximum resistance for crude here. Hence, it has to stay above 90.6, 91.2 zone in order to confirm a reversal. Now, if you connect the dots here for oil, you can find that it is trading in this bearish channel. The top of this channel is at 91.8, 92 zone. Beyond 92, it is confirmed of a reversal. If you look at the moving averages, these are trading with divergence and bearish. The 20 and 50 period are also crossing over here for bearishness. If you look at a stochastic, this is rising. The MACD has formed a bottom here, double bottom, and it is crossing over here. This also suggests for a possible rise. RSI is staying flat, coming to 2. Now on the 2-hour charts, note these 4 candles. The preceding 4 candles yielded lower highs and a flat bottom. This candle is trying to break out, and hence the possibility of a little rise exists. However, note this crossover on the moving averages. This is a bearish cross which suggests 90.8, 91, 91.2 is going to remain a great resistance. And on the downside, you can note 90, 89.8 is indeed a great support. So for the day, if you see oil staying below 90 levels, when I say 90, this price, that is the buy price here, should be below 90 for us to confirm a selling entry. But then 89.8, 89.4 and 89, three major support exist on the downside. Hence, you have to keep trailing and keep shifting your stop losses to these prices once you see a confirmed direction on the downside. The stochastic is rising here. That's still a sign of further rise or bullishness. The MACD is still staying bearish. It is just trying to converge. You can note this. It is just trying to converge. It is not yet crossed over. A crossover should bring more bullishness. But it has come down to the lower levels. And if you note this, after the drop, an extreme rise and again a drop and possibility of a rise again exists here. RSI is staying comfortable. Coming to 3-hour charts, if you note at the 3-hour chart, the moving averages have converged. These have not yet crossed over. It is still not bearish. And at the same time, one must note that it is still yielding lower highs, lower lows, staying in this bearish channel. The bottom of the channel somewhere at 89 levels and the top here at around 91.8, 92 zone. It is trying to retrace. First resistance zone should be at 89.8 in 91.2 zone. Stochastic is rising. MACD is still trading with bearishness. It can probably converge from here. There is one probability for it to happen. But remember, see the triple bottom levels and the bearishness is sharp. So I will wait for how it behaves at around current levels. It can possibly stress the drop on the downside too. This probability also exists strong because see the drop has come from a sharply higher levels and it is almost hit a bottom. So it is just consolidating here and can fall further. RSI staying flat. Coming to 4-hour. Now look at 4-hour chart. See these candles are still staying or yielding lower highs. Previous candle was a red candle with a tail here. So this candle may again reverse and continue on the downside towards 90, 89.8 zone. So it is clear here that only buying entry you can initiate as at around 90.4. Once you see oil is staying at 90.4 or above 90.4, you can buy. This price has to be above 90.4 in order to confirm a rise here. But then also 90.6, 90.8, 91, 91.2. I cannot help you, but these levels are nearby and at every 20 cent there is a little resistance. As long as 91.2 is not breached, Do not think of oil as bullish. Do not think of a reversal or a rise in oil here. So once it breaks beyond 91.2, the next target is 91.8 and 92 levels, which are going to remain the great resistance level. Rather, I will say 91.8 and 92.4, the next stronger resistance zone. Stochastic is oversold, trying to reverse. MACD is still divergent and it is still bearish. The candle size has diminished, suggesting that the bearishness is getting diminished, but it has not yet crossed over. RSI is staying flat. Coming to the daily. Now, if you look at the daily charts, we have seen in our monthly and weekly review for oil here that it is staying in this bullish channel. It has always got the support from the 20 period moving average. That is what it is doing right now. Also, one must note that now the 20 period moving average is sitting at 89. And remember the fact the month has just started, the oil is still bullish. At the same time, look at the slope here is certainly a bit change or a bit of turn flat here. So this is suggestive because see we have seen couple of red candles preceding, and also the both the red candles, the body size has diminished with the preceding candle. So yes, again it can reverse and stay bullish from here. The probability exists for this. Stochastic has dropped. MACD, now look at MACD. This is crossed over at top, trading with divergence, trading at bearishness. Look at the formation here. Double top is done, and hence the probability for it to break on the downside exists strong. So as long as 90.8, 91.2 zone is not breached today, we should be very cautious alert from the buying positions. Yes, it has more probability for it to continue on the downside towards 89, 88 levels. RSI is also looking downwards, trying to stay bearish. Considering this, I recommend you to buy oil today at 90.4, but with a caution note that as long as 91.2 levels are not breached, you should not be thinking of a reversal here. You should not be thinking of oil as bullish. 91.2 is the reversal level. 91.8 and 92.4 is the bullish zone, beyond which oil will turn bullish and it is going to fly high. So yes, as long as 91.2 is not breached today, we have to trade with caution, put a 20 cents trailing stop loss. On the downside, I will recommend you to sell at 90 itself. 89.8, 89.4 are two major support levels, and then 89. Once it breaks below 89, the bears will take over and we will be looking forward to 88, 87.6 as the next support levels. Take your trades accordingly. Do like, share, subscribe, and comment, friends. Your every like, share, comment, and subscribe is a great support motivation for me to deliver on time every time to the best of my abilities. And yes, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on 9th of October. Limited seats are only available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also for live market updates, should join my free Telegram channel. The link is mentioned again in the channel and video description. Thank you very much. See you again tomorrow with more detailed analysis on oil, gas, gold, silver, and major global indices. So thus press the bell icon and stay tuned with the more live updates. Thank you.